Welcome to the Daily Business and Finance Show. Exploring Tom Lee's bold S&P 500 prediction and Bitcoin's slippery slope, Nvidia's market cap meltdown, the Federal Reserve's new rule for bank capital, Apple's anticipated AI supercycle, the pros and cons of investing in the tobacco sector in 2024, tech sector layoffs skyrocketing to 100,000 year to date, Carnival Q2 results, smooth sailing or rough waters? And Nvidia's journey into uncharted territory as July approaches. Stay tuned after this short ad break to delve deeper into these intriguing headlines. Tom Lee, who is the head of research at Fundstrat Global Advisors, has made a prediction that the S&P 500 could potentially reach a figure of 15,000 by the year 2030. This particular forecast suggests an approximate annual price appreciation of around 20%, with earnings growth contributing as much as up to 15%. Lee attributes this potential growth to business resilience during the COVID-19 pandemic. Furthermore, he emphasizes on the significant role that artificial intelligence plays in enhancing investment trends.
The value of Bitcoin is on a downward trend, experiencing a decline of 4.9% to approximately $61,100, a low not seen since May. This decrease is due to dwindling demand and ambiguity surrounding potential interest rate cuts by the Federal Reserve. Last week saw a 5% decrease in the top 100 digital assets as well. Ethereum wasn't spared either, with its value dropping by 5.4%. This has had repercussions on related stocks such as Riot Platforms and Marathon Digital.
Shares of Nvidia experienced a drop of over 3% in early trading on Monday. This marks the third session in a row where losses have been recorded. The decline translates to approximately $300 billion in market cap losses, which places Nvidia behind Apple and Microsoft in the competition for the title of world's most valuable company. Despite reports from Taiwan news outlet UDN about a shortage of GB200 GPUs, Nvidia's shares have seen an impressive rise of 153% this year. This is largely due to increased revenue from data centers driven by spending on artificial intelligence.
The Federal Reserve, according to reports, is suggesting a more lenient version of capital regulations for sizable American banks. This could potentially raise the necessary capital by a mere 5%, in contrast to the initial increase of 16%. These alterations may have a substantial effect on large banks with extensive trading operations. Nevertheless, the schedule for finalizing this proposal continues to be unclear. In other news, significant American banks experienced an increase in their stock values during late trading on Monday.
Predictions from Wall Street firms suggest a significant boost for Apple as the company ventures further into the era of artificial intelligence, or AI. It is believed by analysts that Apple's AI technology will be incorporated into approximately 2.2 billion iOS devices and 1.5 billion iPhones globally. This integration could lead to a rise in apps driven by AI, potentially generating an extra $10 billion in services revenue and possibly increasing share value by $30 to $40. Furthermore, Apple's recent collaboration with OpenAI is anticipated to generate numerous opportunities for monetization.
The Food and Drug Administration has given the green light to the inaugural non-tobacco flavored electronic cigarette products in the United States. These products are from NJOY, a company under Altria's ownership, which is recognized for brands such as Marlboro. This approval is noteworthy considering past prohibitions on flavored electronic cigarettes due to worries about young people vaping. The verdict is grounded on proof that these items provide benefits to adult smokers who are transitioning to less detrimental alternatives.
In the current year, the technology sector has witnessed close to 100,000 job cuts, surpassing the layoff rates of 2022. Prominent corporations including ByteDance, Microsoft, Apple, and Meta have all downsized their staff. The video gaming industry too has been hit hard with significant layoffs as Sony and Electronic Arts have trimmed their workforce. Even though there's a decline in layoffs compared to the previous year, employment instability continues to be a challenge in the tech industry.
Carnival Corporation experienced a decrease in share value prior to the release of its second quarter earnings results, which are expected on the 25th of June. financial experts from Wall Street anticipate a quarterly earnings per share, or EPS, of -2 cents and revenue totaling $5.67 billion. This indicates substantial growth when compared to the previous year. Despite uncertainties in the near future, Carnival's debt situation is improving as it pays off high-cost debts. This could potentially draw more investors.
Nvidia, a company specializing in AI chips, has become one of the largest corporations in the United States. Despite experiencing a 6.7% decrease in stock and a reduction of $500 billion in market capitalization recently, Nvidia's strength is evident with its year-to-date increase of 138%. Earlier this month, the company momentarily exceeded both Microsoft and Apple in terms of value and continues to surpass other companies listed on the S&P 500. However, Jonathan Krinsky, BTIG's chief market technician, cautions about possible near-term unwinding among leaders for the year-to-date. And that's a wrap on the Daily Business and Finance Show. Keep investing in your knowledge, and we'll meet again tomorrow. Stay financially savvy, listeners. I'm Montgomery Jones.
And I'm Amalia Dupre. Good night for now, until we cross paths again tomorrow.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.